It actually takes an Anchor Watch or a Meanwhile or these new businesses to come along, have the expertise, have the innovation, have the drive, and get it done. It's not going to come from traditional underwriting or traditional insurers.
I think that the likelihood that people will live longer in the future than they did in the past is very likely, and frankly, that's what the great combination between life insurance and Bitcoin offers, is because as people live longer, if their dollars are going down in value, then, well, if you save for retirement, but your retirement's longer than you expected, then you might run out of money. So Bitcoin for us is a great combination for that.
This next panel is going to be wonderful because it's the opposite end of the coin, and it's an emerging aspect of the industry that we have some incredibly qualified and some incredibly passionate people. It's called Risk Off, and it is Bitcoin through the eyes of insurers. We're joined by some of the finest folks in the space. So if you could please join me in welcoming Rob, Dave, Danny, and Dan, who are going to take us through this next panel.
Good afternoon, everyone. And first, huge shout out to Rod, Rob, the entire Bitcoin Park team. As a Nashville native and Bitcoin Park member, if this is your first time here, thank you and welcome. So I figured we'd just start with just a quick round of introductions, and I have some notes here, but I'm also big on just, seeing where the conversation goes. I'll just kick off first. My name's Rob Hamilton. I'm co-founder and CEO of Anchor Watch. We offer insured custody. That is, we are a Lloyd's of London cover holder, meaning that we handle the underwriting, the distribution, and ultimately the execution of one-to-one insurance for your Bitcoin held in our Bitcoin custody solution, Trident Wallet.
Dave Schwab, co-founder of Resolver, and we're bringing Bitcoin to insurance. One of the first things that we're doing is launching the BDIC. You can think of it like the FDIC, but for your Bitcoin holdings, where you as the individual are the named and indemnified person in that transaction. So if something should happen, you're the one who gets your Bitcoin back. And we also offer it denominated in Bitcoin. Of course, it's Bitcoin denominated insurance.
My name is Danny Bear. I run all revenue for Meanwhile. Meanwhile is the world's first and only Bitcoin-denominated life insurance carrier. So when we get together at our Bitcoin insurance cocktail parties, these three have a lot more to talk about than I do because they all work in property and casualty insurance. I work in life insurance, so we can get a little bit into the difference there. But we operate a life insurance carrier that uses Bitcoin as our currency, and we sell life insurance products that's similar to the carrier itself, use Bitcoin as their currency.
I'm Dan Ross, a co-founder and CTO of a company called Native. We're pretty much the only dedicated digital asset insurance broker in the world. We've been doing it over 10 years in many different guises and kind of came together as Native to really be the center of expertise in insurance for anything that needs to be done in digital assets, from the small right up to the governments and institutions. Thank you.
Excellent. Yeah, I think for the topic of insurance, Danny, you called out a really important bifurcation with life and health versus property and casualty, and that's like roughly a 50-50 split between kind of the segments in the world. And insurance is, with actuarial science is very data-based. And I think maybe thinking about it for the group in general, lessons learned around past incidents around Bitcoin custody, or maybe extending that to you, Danny, so it's not strictly P&C. Is underwriting Bitcoiners for life insurance different than the average segment? And that's an open question to the group, maybe starting with you, Danny.
Yeah, thanks for the softball, because from my perspective, we took the much easier route than you guys. People live however long that they live, and there's tons of data on that topic. So we can look around in every jurisdiction around the world, look at the actuarial science specific to those geographies and jurisdictions, and we can make actuarial underwriting decisions based on that data. Now, crypto companies have been around for a much shorter period of time, so you guys have the greater challenge, I would guess, in having to underwrite the risks associated with crypto-specific companies. I like to think that the smartest people I know are obsessed with a few different topics. I think it's Bitcoin, AI, and longevity. So I would venture to guess, as operating a life insurance company that is insuring individuals who are into Bitcoin, who may also be into longevity, I would venture to guess that we are very conservative in the underwriting decisions that we're taking, because I think that the likelihood that people will live longer in the future than they did in the past is very likely. And frankly, that's what the great combination between life insurance and Bitcoin offers, is because as people live longer, if their dollars are going down in value, then, well, if you save for retirement, but your retirement's longer than you expected, then you might run out of money. So Bitcoin for us is a great combination for that.
Yeah, I guess maybe Dan or Dave, are you thinking about seeing the custody landscape evolve over the past decade? And Dan, you said that being in the insurance business for the past decade, focusing on this asset class. Have we seen maybe learnings from how things are done incorrectly? How does that impact insurance limits? Just like an open question about getting the risk markets up to speed about how to price and understand this risk.
Yeah, absolutely. So insurance is just the biggest criminal for not evolving or updating or modernizing. You go to Lloyd's of London, it's 15 years behind banking easily, and it's not catching up anytime soon. Everything to do with crypto, AI, and all the things that's going to come to transform everything is not going to be caught up with there. It actually takes an Anchor Watch or a Meanwhile, or these new businesses to come along, have the expertise, have the innovation, have the drive, and get it done. It's not going to come from traditional underwriting or traditional insurers. So what we've seen over the years is a willingness from traditional insurers to participate because, it's actually quite straightforward. And they're very used to insuring traditional vaults with gold and art in it. And so it wasn't a far leap for them to try and understand the technicalities of Bitcoin and then kind of put it back to the thing that they've been insuring for hundreds of years. But it's not quite good enough. And it's helped people get off the ground and helped the industry get to a point where we can reach institutions. And without that baseline help, I don't think we would have got there in this timing. But now we are there. We need something far more fit for purpose. That's why we have everyone here. That's why the insurance industry is and its community is really core and niche. But those people are the ones that are here to build the safety net for all of crypto and Bitcoin.
I guess, Dave, to you, open question too, but with BDIC, Bitcoin Deposit Insurance, how does that underwriting look, understanding and discerning it, getting that, brokering the market between people who are providing custody and the insurance carriers that are actually providing that underwriting capital?
Yeah, we're working a lot with a new breed of underwriters, some of whom are in this room, Alex from Soder in the back corner there. But we do have to work with underwriters who can provide the regulatory capital natively in Bitcoin and who understand Bitcoin while similar to other specie insurance. It is different. The way you would lose Bitcoin is not the same way you would lose a piece of art or gold. So working with them in order to have reasonable rates, working with them to embed this offering, whether it's within, a multi-sig setup or, a hardware wallet, making that coverage accessible and, indeed working with you all to develop the standards. And we think about it the way, take the turn of the Industrial Revolution. I know this is an analog that we've brought up a lot, but I think it's instructive. You had a mass migration from rural to urban areas. So fire codes had to evolve with denser housing, and it's things like fire escapes, having bedrooms have a window, to the outside. Or you could think of it like the electrification of the grid and that build out. We're developing those codes now together. I think there's a lot of pioneering being done, but we're also gaining a better understanding. And as we underwrite these things, I think leading the way on what those fire codes are for Bitcoin custody.
And I will just say, I think the key word there is together. And there is very few industries like insurance where your competitors are also your business partners on a lot of things. And the more complex and the bigger it gets, you're participating on the exact same deals with the exact same information, although you're supposed to be competitors. And so what's unique about insurance is the ability for people to come together to get something bigger and better done without feeling like you're giving over your business or your opportunity to someone else. It's not zero sum. So coming together, creating those standards, helping get that scale is really what's driving most of us. You're not going to get rich in insurance. Sorry, guys.
No, that's great. No, yeah, I think one interesting call, Dave, to what you said, with Specie, just for those in the room that are learning about the ecosystem, when it comes to custody, it's usually in a high level aggregated into two buckets. You either have cyber insurance for a hot wallet connected to the internet, or you're going to have what's called specie insurance, which would be more akin to your cold storage. And this is just a fascinating evolution where the first policy was maybe bound around 10 years ago. I believe it was for Coinbase for the first cold storage insurance. And the underwriters at the insurance carriers that were best fit to do that were the specie insurers, which are doing fine art, cigar and wine collections, rare coins, and the stamp collections. That is the closest to, when you think about it, when you make Bitcoin in cold storage, you, as close as possible, bring it to a physical bearer asset, whether it's a seed phrase or an HSM, a key that's offline, and underwriting those risks, that's the starting place, right? And I think over time in the education and enablement of building different products in the space is kind of showing that Bitcoin as programmable money, it could be more than just a bar of gold. You can't 2 of 3 your bar of gold. You can't you can't multi-sig it, you can't time lock it, you can't geographically spread it around. You can't have if you're underwriting physical specie and the gold vault gets broken into, that's one physical incident. But this idea of distribution of risk through keys and processes is kind of like really extending it into Bitcoin as a capital asset and thinking it as that capital asset in a really interesting way as it intersects with technology. I guess I'll kick it over. I mean, I kind of teed off the next question already for the group. I guess innovations around improving the risk in underwriting for custody. I know we've seen a lot of incidents. I was back in London in February, right when the Bybit hack happened, and was explaining to them there was a huge panic of like, wait, could this happen in Bitcoin? And going through looking at how blind signing was being done with Ethereum on a ledger, you're just blindly committing to a hash, and then you're not even seeing where the money's going, and you don't realize, wait, I actually gave admin access to North Korean hackers, right? And I think talking about here at the Bitcoin Treasury and Custody Summit, understanding kind of the security properties of how to harden it. I'll throw it over to the group if anyone has any thoughts to add around like what is the evolving ecosystem and landscape as it relates to Bitcoin and insurance in general.
I would say insurers generally are taking a very non-technical approach to insuring custody. But what we've seen is what external monitoring and security services can do to improve a risk or at least be able to react to a risk. Now we're seeing the standard of these services being implemented deeply into insurance policies that trigger them parametrically or have a condition that XYZ must happen should the worst happen. That's really where I see the evolution in custody insurance happening, because that's when we get technical people with real-time data that matters and is actionable back into insurance, rather than what it's been for the last 330 years, which is, here's a piece of paper, it's very expensive, please buy it and hope it's going to work out once we get there. And that's a bad reputation insurers have built over time. The more data-centric we're getting and the more aligned with the technology and typical insurance policies are becoming, the more certain it is and the more resiliency, I think, and certainty that gives everyone involved.
Yeah. Okay. Well, I was going to wait because I'm going to have a very different view on custody and thinking about how it relates to insurance. So, Dave, do you have anything to add to what Dan just said? Or
Yeah, I think the theme is there's a lot of ways to hold your Bitcoin, and there's trade-offs between maybe sovereignty and convenience, and there's probably some sort of frontier there that's dependent on your personal preferences. It's like, yeah, you can hold a bar of gold in a safe anchored to your wall in your house and get that insured. You can have it stored in a vault and pay for those services with some kind of management fee. It really, I don't think there's one solution, but I think there is a tapestry of those, and having clarity on the standards and the risks from an actuarial perspective, that's where we're going to move this market forward and find product market fit in a lot of different places.
Yeah, so the reason I was waiting to go last is because I'm going to go a different direction here. We as a life insurance carrier, we think about custody differently. They're thinking about the risks to custody and how do we underwrite those risks, because they're the back-end trust factor or the de-risking factor. We view custody as actually an expense. So operating a life insurance carrier, one of the regulatory protections that are regulated, we're regulated in Bermuda, licensed and regulated by the Bermuda Monetary Authority, and a protection that our regulator provides our policyholders is that every time we put capital at risk, we have to hold additional reserve capital to offset that risk. And so the riskier that either investment or policy or whatever is, so think about each year you live, the likelihood you die that next year is higher. So our reserves for every specific policy go up as every year passes by, because the likelihood that you will die goes up. And from our perspective, holding Bitcoin at an institutional custody provider is a risk. And so when we're underwriting custody, we're actually underwriting like who is the most legitimate institutional custody provider, what is the best way for an institution or a financial institution to hold their Bitcoin, because our regulator looks at that risk and then they tell us you have to hold a percent of reserve capital to offset even just that custody risk. So what I would encourage people who are out there working in financial institutions that are providing custody as a solution is you should actually go to regulators and vouch for why your solution is better than maybe something else, because we're incentivized from a capital balance sheet or from a balance sheet efficiency standpoint to go to the custody solution that is viewed as the least risky by our regulator because our balance sheet becomes more efficient.
I actually want to click in on that. I was thinking as my next question for you, Danny, specifically with Meanwhile, you guys are an admitted insurance carrier in Bermuda, right? So you own your own capital stack and it's all Bitcoin denominated. So is there anything for those in the room that are understanding kind of the evolution of the landscape? Like we are dollar denominated because we work directly with Lloyd's of London, and that's where we can get scaled immediate capital in dollar denominated stance. Today, Lloyd's and those carriers are not holding Bitcoin on their balance sheet yet. I think insurance carriers are going to be a massive buyer. And when you're thinking about longer dated duration liabilities, it makes perfect sense for them to offset the risk on their balance sheet when they're usually just forced buyers of fixed income instruments, which, those yields aren't doing great, real adjusted, right? Anything you want to talk about, just like the process of setting up that carrier in Bermuda, doing a Bitcoin denominated business out of the gate, running your premiums are collected in Bitcoin, your claims are paid in Bitcoin. Like, is there like that whole journey in setting that up and kind of what it's like running a business that way?
Yeah, it's interesting. The whole secret sauce to our business is that we are exclusively denominated in Bitcoin. So we became the first company in the world, I believe. My lawyer says I have to say I believe because we can't prove it.
Lawyers.
We believe we're the first company in the world to actually state our externally audited financials denominated in Bitcoin. So our income statement, our balance sheet is listed to the Satoshi. There isn't a single dollar in our financials. And the reason that we do that is because, again, every time we put capital at risk, we have to hold reserves to offset that risk. So if we were dollar denominated, if we wanted to hold Bitcoin, which is the most volatile asset, we would have to hold an exorbitant percentage of reserve capital to offset the risk. But by doing everything denominated in Bitcoin, there is no relative volatility. For us, one Bitcoin is one Bitcoin. I don't think about dollars. We literally call it the exchange rate of Bitcoin. And so what we're able to do is, because we are just a normal life insurance carriers, there are carriers in the world that operate in all different kinds of currencies. We bring to market normal life insurance products that get the same tax benefits as any other normal life insurance product. But by using Bitcoin as the currency, we get that relative strength. And so our policyholders literally pay their premiums in Bitcoin. The value of their life insurance policy accumulates in Bitcoin tax-free because it's life insurance. They can borrow against that value during their life tax-free because it's a tax-free policy loan. And when they die, the death benefit pays out to their beneficiaries tax-free, but it's just all in Bitcoin. So it is literally critical for us to do everything in Bitcoin, and that's why we are able to do something that no other legacy life insurance carrier can do, because they are all in dollars or fiat currency, and as soon as they bring Bitcoin onto their balance sheet, it becomes too capital intensive to carry that.
Do you have something to add?
Yeah. I want to I think you understated how impressive that accounting sheet is. I deal with balance sheets all day long. There was something about seeing a whole balance sheet and everything that comes with the normal financials, but seeing Bitcoin on the end, that just did something. And I urge you to all go look at it. It's so simple, it's so boring. But when you see a real business with a real balance sheet that's very well run, and it's got BTC and there's not a dollar on there, that will get you going, I promise you.
And I think it's important just to note there that we are a normal life insurance carrier, so we are required to do all of the normal things that life insurance carriers do, and that includes reporting. So our externally audited financials, which are on our website, are audited by Harrison Trotter. We undergo ongoing internal audit by Ernst & Young. It is all like the very basic, boring, normal things that insurance carriers do. It's just literally in a different currency. Yeah.
First time I saw it, in fact, my whole business, everyone in the room, we were like, yeah, we're here.
You're a nerd. That's how I know you're a nerd, yeah.
I think you're all getting a little triggered at the compliance, too. It is very difficult, especially if and insurance is not always so simple where it's all on just one balance sheet. There can be many balance sheets involved in different jurisdictions, different reinsurers. So having the ability to flow in between different on and on ramps and into different reserve currencies and split them, there's sort of self-promoting here, but it's complicated and there's a lot to it and it's difficult to do. So it is amazing, what you're doing there.
And I just want to shout out SOTA, Bermudan business. Yeah, exactly, Bermudan insurer. They
Raise your hand.
The first people to really be doing multi-currency balance sheets that have crypto. So they got a Bitcoin balance sheet, I believe they got an ETH balance sheet, and I believe they got a USDC balance sheet. That level of innovation is what's going to take us into the stratosphere.
Yeah. I guess my next question actually was for you, Dan. So for us on this stage, as an insurance broker, you're the one that's kind of meeting the market where people are trying to create risk, like products like all of ours, and taking them actually to end carriers for underwriting. Like over that journey, over the past 10 years in the larger ecosystem, like what have you seen evolve, changed, increase understanding? You said that carriers run like maybe 15 years behind. Does that mean that they're just starting to get a little bit of it? You know, Bitcoin's been around now for coming up on 16 years. Like, are we just starting to get, like, what have you seen over that time working?
So insurance businesses are inherently need to be very stable, both visually and on the balance sheet, which means that innovation, although there might be the best will in the world for people within the business and in the industry, and at Lloyd's particularly, to innovate, there is not much room to have the room to innovate and, you know, be able to fail. And so that's the reason why nothing's really progressed in terms of technology. But now we're getting into a point where the old guard is how I'll call it. The people that have been in the same job for 20, 30 years, a big name in insurance, but they're known for traditional things and building up a business that doesn't rock the boat, those people have left. And now what we're seeing is people in authority that are younger, more innovative, and more technical, and more technology native. And I think that's the big difference. They're willing to understand what it is because they know they're not rocking the boat so much that they're going to ruin their own career and the reputation of their business. And that's been the big change.
Yeah, and I think... Yeah, go.
Just on the topic of like appetite and adoption from legacy insurers, I think one of the things for me that really got me, I thought we had a good idea, but what got me really excited is last November, post-election, when MicroStrategy or strategies really started ramping up their convertible debt offerings, the number one purchaser of MicroStrategy convertible debt was Allianz. Allianz is the second largest insurance carrier in Europe, the largest in Germany. That to me is proof that these legacy carriers are hungry for exposure, but unlike us, they can't hold spot Bitcoin. So what's the next best thing for them? It is they're buying unrated corporate debt with Bitcoin exposure.
So if you thought compliance was like nerdy in the weeds, we're going to talk about balance sheet regulatory admitted assets now. So to just one quick point on that, Bitcoin is what's called a non-admitted asset, which means that if you are an insurance carrier and you buy Bitcoin, it gets written 100 cents on the dollar off to zero. It's not admitted at all. Whereas if you have unrated corporate debt, you're going to get a higher credit against that. So things like strategies, convertible bond vehicles allow insurance companies to arbitrage and get Bitcoin upside exposure without taking a full hit on their balance sheet. And this is kind of the start of that journey and Bitcoin kind of maturing and financializing. And I guess, Dave, throwing it over to you, thinking about you're building multiple products right now, right? So the Bitcoin denominated insurance, I always say FDIC, so the BDIC, right? So you want to talk a little bit more about mechanically how that works, or?
Yeah, we embed the BDIC offering. So we're not an actual carrier, like either of you or an MGA. We're more of a many-to-many platform where we can embed your offerings within, a multi-sig wallet, or along with buying your cold storage hardware wallet, and you can choose the coverage that's what you want in that setup, and it'll be dependent on your setup, but you can set those coverage limits either in fiat or in Bitcoin. We just view it as a way to give people choice. It's a way for these hardware wallet providers to establish, a very sovereign relationship with their customers and generate ongoing cash flow as well. So it's a good trade on both sides. And yeah, I think part of this too is, bringing insurance to Bitcoin, but also bringing Bitcoin to insurance. That's important for us to be able to move that risk in various ways. And yeah, we mentioned, some of these products from Strategy. I think the Stretch one is really interesting too for insurance.
STRC.
Yeah, and we're also doing some things around insurance-linked securities. You could think of those as just securitizing insurance for yield, and it's the probability of, a facility burning down or somebody living or dying, but you can denominate it natively in Bitcoin and have this very non-degen, very base, boring actuarial way to generate yield. And yes, it's a little different and newer. I actually think it's superior with multi-sig setups like yours.
Well, I mean, I think just looking at it that way, it's not risk-free yield. You are literally underwriting risk, right? And you are being paid for that underwriting of risk, right? So it's a fundamental transformation of, instead of going mass leverage and trying to run an arbitrage strategy or doing something on leverage, the leverage in insurance is done through risk distribution as opposed to taking out debt, right? Absolutely. And those reserve collateralization ratios. And to talk about the size of this opportunity, I think globally for specie kind of like cold storage for all of crypto is like maybe $1 billion of current capacity. Bitcoin alone is $2.4 trillion, right? So we're talking about like the size of opportunity that many of the custodians that are charging for insurance today, well, they're charging for custody with a little insurance mechanics attached. I think when you talk about BDIC and also with us, there's a one-to-one direct link between your Bitcoin, you're paying for that insurance, and it's tied to your Bitcoin, which is, I think, the more as the Bitcoin ecosystem continues to mature and financialize, it's kind of baseline what you'd expect for anything else, right? Like if you take out a loan against your house for mortgage, they won't let you close the mortgage unless you have insurance on the house because they don't want to hold the risk of what happens if the house burns down. I think the vision we're seeing here is that that'll be extended towards Bitcoin custody. If you're paying for custody, you want to have an alignment of outcomes where I get my Bitcoin back, and if something goes wrong, I'm not the bag holder as someone who I kept my Bitcoin custody somewhere else.
Yeah, it's tail end risk transfer, and you can do that for custody. You can do it for L2 solutions. You know, they sound great, but what if for some reason the Bitcoin gets yeeted into the sun, never to be seen again? They need assurances, and if you don't have the balance sheet of BlackRock to back that up, you need some insurance to indemnify you in those situations.
Okay, so we got 4 minutes left. Does anyone have any sort of, we'll take some closing thoughts, anything we didn't get a chance to discuss on the panel? We can work our way down.
Yeah, one thing I'd love to bring up, which we're all kind of touching on but not actually addressing, which is the operational efficiencies blockchain and Bitcoin technology brings to insurance. That's the thing that's going to change everyone's here, because hopefully your insurance premium should be better across the board. To give you an explanation, like I said, insurers are very slow to the uptake unless it's something they fundamentally need to do, either from a regulatory standpoint or a survival standpoint. It currently, in Lloyd's, and with bringing many insurers together to get complex policies done, even once you agreed upon everything, including the price, it can take months before money actually ends up where it should be with the insurer. We at Native also are an on-chain business, and we are fully funded by Nexus Mutual, who is probably the first on-chain insurer there is. And we use a lot of smart contract infrastructure to process complex insurance. So to give you an example of the change that it's going to bring, we were able to do, we personally underwrote a brand new product that had never been out there before. From start to finish, i.e. the first phone call we had to them having the policy and everything being paid was 4 weeks. The reason we were able to do that is not because of the expertise of us being able to write the product. It was that when we were going to actually bind and settle the policy, there was finality, a concept completely alien to insurance. There is a massive chain of money being passed down the line before the right person has the right money, and sometimes it gets to such bad age debt that is just written off across the board, which is really stupid. The policy we wrote was 25 million. And that wasn't 25 million we're going to say is an account if you need it. That is 25 million on blockchain that is moved to a segregated account so it can't be touched. At that point, not only is that moved and the policy given in a final way to the policyholder, but every single person in the chain is paid there and then without any age debt, without any need to worry about the finance. And we did it for $1.45. Just cannot compete with traditional insurance, and they are either going to have to adopt businesses that are willing to take up that technology to process things, or they're going to have to do it themselves, and I promise you it's not the second one.
Yeah, I'll be quick, just conscious of time here. So this might be inappropriate, but I'm actually going to jump back to the last panel. Where did yield come from? I think one thing that's really interesting is Bitcoin treasury companies become this very, very popular concept. And people spend a lot of time thinking about like accretive dilution. How do I go to capital markets, raise dollars against my balance sheet to then buy more Bitcoin, where I'm diluting my shareholders, but hopefully it's more accretive than dilutive. One thing that we're excited about is there are insurance products that are yield bearing that corporates, institutions, individuals, family offices can buy that want Bitcoin denominated yields, an actual true Bitcoin denominated yield in an insurance product. So one thing is called a guaranteed investment contract, or a GIC, and it essentially allows for people from a governance perspective to go, if you're a publicly traded company, you go to your board, and rather than saying, hey, I want to deploy some of my Bitcoin treasury into protocol X that's existed for 6 months and nobody understands the risks. Rather, you can say, I want to deploy some of my Bitcoin treasury into a highly regulated insurance product that yields natively in Bitcoin. So I'll debate all the Bitcoin yield people later, but I will say the last piece, there is no such thing as risk-free yield, and that's why it's so quantitatively proven on our balance sheet depending on the reserve capital treatment that we have to apply.
Well said.
I think your dollar and change beats the working capital costs for you. We've seen 180 to about 220 days as the typical time for that money to move end to end in this chain. So I think it's hard to overstate how wild that is. And insurance, it's an ancient industry. It's the Code of Hammurabi. You know, if you get robbed in our territory, we'll indemnify you as a merchant if those losses come here to trade. You know, insurance needs Bitcoin, and I think it's going to radically change things. Very excited about it.
Well said.